Okay, sorry for the video just now. Okay, we will start our webinar. A very warm welcome, everyone. My name is Nadiah Jaafar from Kenanga Futures and Berhad, and I will be your host for tonight's webinar entitled Introduction to FCPO and How to Trade It. Thank you for spending your precious time to join our webinar today. Please take note that this webinar is purely for education purposes and is not in any form or manner of trading advisory. Kenanga Futures and Berhad accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. Before we start, we would like to take this opportunity to invite you to Kenanga Futures next webinar on 22nd July 2021. It's about FCPO markets, first half review and second half preview. An invitation email will be sent again to you. Don't miss out. Please remember to register once you receive the emails. Next, if you have any questions for our speaker, please feel to post your questions through chat box, and we will attend to your questions during the Q&A session. To post your question, please draw your attention to the bottom of the chat box. Please click on the text bubble icon, and it will be switched to the Q&A chat. You may type in your questions into the chat box. Today, we have Mr. Edwin Lee here, and he's going to share with us about introduction to FCPO and how to trade it. So, without delay, I would like to kickstart our webinar by welcoming our speaker today, Mr. Edwin Lee. Mr. Edwin Lee, over to you.
Okay, hi, thank you, Nadiah, for the introduction. Good evening, ladies and gentlemen, and thank you for joining us this evening for our webinar on the introduction to crude palm oil futures and how to trade it. Okay, so without further ado, let's just kick off the webinar. Okay, before we begin, also I would just like to state that this is just the standard disclaimer that this presentation is just for educational purposes and is not in any way trading advisory and strategy. Okay, so we just information sharing with our attendees this evening. Okay, so this will be our agenda for this evening. So we will be basically covering 4 major topics. Okay, so number 1, what is crude palm oil and its key pricing factors? So before we actually go into details about the futures contract, we need to understand about what we term as the underlying contract. Underlying asset. So in this case, it will be the actual physical crude palm oil. Okay, and then next on number 2, we will be introducing the BMD, Bursa Malaysia Derivatives crude palm oil future. So this is the actual futures contract itself, FCPO for short. And at the third point, we will be talking more about the contract specifications and the characteristics of the contract. Okay, and last but not least, towards the end, I will basically be sharing some key steps on how to successfully trade the FCPO. Okay, moving on next. Okay, the first topic we should be looking to is what is the crude palm oil and its key pricing factors. Now, palm oil is basically an edible oil that is derived from a mesocarp, the reddish pulp of the palm oils. I think most Malaysian at one point of their life have actually seen a physical palm oil tree. I mean, even when you drive along the highway, it's something that is, I would say, not new, fairly common to Malaysians. So it is also the world's cheapest and most widely used edible oil. Okay, crude palm oil. It is widely used in the food and beauty products, and as well as a biofuel. In this case, it will be biodiesel. Okay, there's 3 main types of palm oil. First is the crude itself, and we have the crude palm kernel and palm oil. So essentially, these are just 3 different stages of the palm oil in terms of the processing, right? So this is generally a broad scope of what is the crude palm oil. Moving on, just to share some fun facts, palm oil is the most productive vegetable oil in terms of acreage, in terms of yield. So for each hectare of land, you can, for planting purposes, you can extract 3.5 tons of palm oil. So if you look at the chart, it's actually the most productive vegetable oil. The rest, like rapeseed, sunflower, and soybean, it's all less than 1 ton per hectare. Okay, so this is just something to share with you. Moving forward, this is the MPO Malaysian palm oil monthly total production, export, and stocks. So basically, once you are trading into palm oil, these 3 points, which is the title, will be quite, I think, you will have to definitely pay attention to it, so to speak. Okay, because essentially, CPO is a commodity, and it's the pricing is based a lot on demand and supply. Okay, so as you can see, since this is a comparison, since from 2019 to 2020, you can see actually the green line, the stock level has been actually dropping. So there's been a lot of taking up of the actual palm oil itself. You can see it back in early 2019 when MCOs hit. You can see there's a major dip after February, March. So basically, there was a lot of drawdown in terms of stock. But the production was more or less also hovering about between 1.5 to close to 1.9 million. So for the total production in 2020, it was 19.1 million tons. It dropped from 2019, from the previous years, down about 3.6%, mainly due to disruptions on the plantations, FFB, the fresh fruit bunch, and also the harvesting and milling processes. So MCO definitely affected what I would consider the supply chain in terms of the labor, for one, and second is logistics. So these two aspects, I mean, basically has affected, caused this the disruption in supply of the crude palm oil. Moving forward, we have these are the 10 major palm oil importers. So if you look at it, China and India, these are the 2 major importers of palm oil. If you look at the 2019 figures, you can see actually India is the largest importer at 4.4 million tons. But because last year during 2020, you see it dropped down to 2.7. I think if some of you may recall from newspapers and the media, basically there was some, let's say, political misunderstanding. Let's just put it as that between between Malaysian and the Indian government. So basically, India boycotted, the government boycotted and palm oil and asked their people to buy less of the CPO. And on top of that, they also increased the import levies, so making it less profitable for them to buy the palm oil. But I think moving forward, I think this year, 2021, we will see a recovery in terms of imports from India. Okay. Moving on, now that we have covered the importers, now we are going to move on to the producers. Okay. So this is basically a snapshot of the crude palm oil industry and a bit of a history. I won't go through the history, but in ASEAN. So if you look at it at the top left corner, the largest producer is Indonesia, followed by Malaysia. And then to a certain extent, Thailand also is one of the producers at third spot, okay, third ranking. Indonesia and Malaysia basically constitutes to approximately 85% of global production. So you can see actually Malaysia and Indonesia are, I would say, a dominant producer in terms of this CPO in globally, right? So moving forward, next we can actually see the global oil and fat production. This is the global edible oil that it's produced in globally. And as you can see from the chart, the bottom, the red part is actually palm oil. So basically, we are the most produced edible oil. So accounted for about 31.4% or 74 million tons of total oil and fats production globally in 2020. So this was based on last year's data. Palm oil is the largest contributor in terms of the global edible oils and fats. All right. And next we have the MSPO. I just want to share a bit about this because I think it's been quite popular. Like you read on newspaper, especially in the palm oil industry, there are a lot of people are talking about MSPO. So this, what is MSPO? So basically, it's MSPO is a standard for national certification for national sustainability of the palm oil industry. Basically driven by the industry and along with the Malaysian government to actually introduce a sustainable standard to palm oil. Because if some of you might be aware that in certain parts of the world, particularly Europe, they're actually very concerned about the carbon footprint of this, edible oils in general. So I think this is a positive step for Malaysians to have this standard to actually meet their requirements. In Europe, they have the RED 2 standard. So basically, this is, I would say, a step towards complying with the standard, okay, the global standard, right? So as of this March this year, 86.4% of the Malaysia the planted area, the palm oil planted area is already MSPO certified, right? So just to share some additional information with you. And then moving on, we have the what products uses crude palm oil. So actually, it's quite a large variety of products. As you can see, it covers some consumer products like lipstick, shampoo. Edible, definitely, like margarine, toothpaste, and of course, the most common is the cooking oil, which we use. And also, last but not least, it's also been some revived interest, I would say, some interest into this biodiesel, using it as a feed for biodiesel fuel. Okay, and just on the side note, if I'm sure you all know this, the local beverage Milo, or some of you prefer to call it Milo, right? If you actually look at the ingredients list of Milo, right, you will see palm oil. Yes. So if you are wondering, those that you have traveled or been abroad in countries like Europe, when you drink their Milo, right, it tastes very different. Right? It does not contain palm oil. But in Malaysia, the one that is produced in Malaysia, it contains palm oil, and based on my personal preference, it tastes much better. All right. Okay. So now moving on, we have factors affecting crude palm oil prices. So, okay, let's start from number one on the right, demand. So as I mentioned before, CPO, commodity, demand and supply. So in terms of demand, festive season, importing countries and consumption. So meaning, for example, just say it's actually, CPO is quite a cyclical commodity. So for example, near Chinese New Year, right, which is usually within the first quarter of the year, you will see there will be a pickup of buying the quarter prior to that. So sometimes you will notice around November, December, a couple of months before Chinese New Year, all right? Let's say 3 months before Chinese New Year, you will see that the demand, the price will generally historically go up, okay? So festive seasons, long holidays, whether it's in China or India, usually the demand will increase, okay? So that's just an example. And on the other scope, we have also supply. So supply will be basically the production, what is the output, and what's the production figures that are being generated in the palm oil industry. And then next, we look into the point number 3, prices of other edible oil. So this, we are looking at basically the competitors, right? So obviously, we are looking at the one which I previously mentioned, rapeseed oil, soybean oil, and even now coconut oil. So these we have to do we have to be sensitive towards the pricing of these competitive edible oils. And moving on, point 4, we have weather events and natural disasters. Because all these tangible crops are grown on farms and fields, right? So weather would definitely have an impact on the crop. Whether it's, for example, if there's like persistent flooding, maybe in in East Malaysia or whatnot, then obviously it will affect the harvesting and also the logistics of the palm oil. Next, 5, import and export policy changes. So governments that on our side export from Malaysia, if there's any new fiscal policy or levies on taxation, obviously it will affect the prices, and for the important countries as well, if they do their adjust their levies or even policy, it will definitely affect the price of the palm oil. Okay, so this is also tied in with point number 6. So government policy changes. All right. number 7, last but not least, would be the currency movement. The relationship, I mean, generally between ringgit and the US dollar. So as the prices of the, if the ringgit is weaker, so to speak, it's generally more attractive for the people, the buyers, to actually buy more. It's cheaper for them to buy. So this is just a basic example of how the currency movements would be affect the prices of CPO. So moving on, next we have just did a few snippets. This is all from our local press to give you an example of the news that we generally would affect the price movement of CPO. So on the top left, we have demand. So India palm oil imports may rise to meet rising demands as stocks deplete. So this is an example, during post, pandemic and whatnot, because they had difficulty in actually importing the palm oil in. So now this would one example of demand would then be actually buying more palm to replenish their stock levels. I think this was also very evident in China. After they have the initial outbreak in Wuhan, there was obviously they had the ports and all were closed, so they couldn't import. So they draw down a lot on their stock levels. So now that things on their end is improving, they are more, I think, they have been basically replenishing their stock, so they've been buying quite aggressively over since the past, I would say, year or so. Okay. Next, supply. So on the right-hand corner, palm planters make urgent appeal to government. So this is obviously related to our MCO. So they're appealing them to, not to say to make it, facilitate it for them to be easier to actually harvest and, basically sell, essentially, in a nutshell, just sell their product, in this case, the CPO. And then at the bottom, we have the export levies. Bottom left, the government increases cess on palm oil by 2 ringgit to 16 tons. On the right, import. So India, on the other side, the buyer increases tax on crude palm oil, could reduce shipments. So it's an example. And last but not least, as I spoke earlier, the fluctuation in the currency movements. So palm oil hits for weekly gains on supply worry and the falling ringgit. So cheaper ringgit, cheaper for the importers to buy the palm oil. Okay. And moving forward, we have certain key important data and events that you would have to pay attention to if you're going to trade FCPO. Firstly, it's on the left, we have the export data, like we call it, from ITS, SGS, and MSPEC. So it will come out the first of every 10th of the month, then the 5th of day after. Okay, so you're like 10 days, 15 days, 20 days. So this is data which is we pay attention to closely. Okay, and then on the right we have the MPOB, Malaysian Palm Oil Board, the monthly reports out on the 10th in terms of their export production and stock levels. At the bottom left, these two events that are actually very popular among the industry, whether they are involved in the industry or they are just basically trading into the markets, the futures markets. The POC, the Palm Oil Conference, which is held every year, usually in March, but the past 2 years it's been done virtually. And the Indonesian equivalent is GAPKI, the one that's done in Indonesia, the conference, annual conference. And at the bottom right is the Rotterdam, the pricing. So basically, any drastic daily physical palm oil price movement from Rotterdam also will affect it's something that we look into because it's the main port where our CPO is shipped to for European consumption, right? So we also look at the pricing there as well. And next we have, so as I mentioned previously, there are quite a few competing oils. The edible oils market, there's quite a few alternatives. Although CPO is still one of the most produced oils in the world. We have soybean oil, palm oil, rapeseed oil, canola oil, and all these, I would say, are the edible oils that would affect the pricing of CPO. So you have to pay attention to them as well. All right. And to a certain extent, there's also, we look into this crude oil, because now, as I think Malaysia is still, I think, a bit still in the stage where we are still trying to get this to gain ground on this particular sector. But Indonesia has been aggressively pushing, especially the past year, in terms of use of palm oil in biodiesel. Okay, next I would just like to share that these are some charts. As I said, this is just the relationship between the demand, supply, and the prices. I won't go through this, step by step with you, but you can generally, it just shows the relationship between the demand and supplies and the impact on the prices. And whenever if you need, you can just actually just refer to it at your leisure. Okay, this is just for something for you. Okay, so now we have covered the first part of talking about the actual physical palm oil. Now we will actually move into the FCPO, the futures contract itself. So I would like to, the next few slides will be actually talking about the FCPO. Okay. So, okay, what is BND crude palm oil? So actually it's a ringgit denominated, it's Sharia compliant futures contract by Bursa Malaysia Derivatives, which provide market participants with a global price benchmark and of the cheapest and most widely used edible oil. Okay, so the average volume is about 58,500, but I think the past year or so, since 2020, I think it's increased quite substantially. Right? Open interest, it can go up to about 200,000. So open interest meaning the contracts that are being left, that are open in the market. Okay. And average volume is about 80 ticks. So 80 ringgit, 80 ticks. All right. So the fluctuation, there is a volatility in the market. Okay. And next, so this is just the illustration of the past 1 year performance in terms of volume and open interest from June 2020 to June 21. Okay. So on average, about 1 million contracts are traded. So it's a very liquid. So you don't have to worry about going in and trading and not being able to exit. It's a very liquid product. Open interest, I think lately it's been hovering about 180,000 lots. Okay, so as I said, ease of enter and exit of your position. The top right corner, you just see these are just the data for the past 2 months. Right. So if you look, in May it's 1.1 million volume and OI was 183,000. June there was a spike in volume because the market was very volatile. In June, the 1.7 million volumes traded. As a matter of fact, the last June, the price range, trading range was 1,009. Means the high low, between the high and the low, it was 1,009. The market range, the price range. Okay, so it's a very traded contract. Okay, global. I would say it's the global benchmark for futures crude palm oil. Okay. Moving forward, I just did a simple chart because this one I just want to show you the price movement. Okay, so this is from 2019 until July. Okay, July 2021. So roughly about 3 years. This is a weekly historical price chart. So as you can see, back in 2019, we were still below 2,000. Okay, so in 2021, around May, we peaked at about 5,000. Okay, and now obviously has corrected quite a fair bit. Today's closing was about 4,157. So it's about 4,100 now. Okay, so this is just to give you that gives you the feel of the price movement over the past 3 years. Okay. Okay, so what are the key features of FCPO? Okay, so it's there's global ease of access because it's traded electronically. Okay, on CME Globex. It's a digital contract, so to speak. All right, you can trade it online and also basically from anywhere in the world. Okay, so there's transparent pricing, offering a clear comparison for cross-hedging purposes. So the people that are in the industry, the physical people, what we term them as, meaning the people from the palm oil industry, they use it to hedging. Okay, because they have to lock in their pricing. So the physical people use it for hedging. And you can actually hedge up to 3 years. The contract is you can do up to 3 years. Okay, essentially. Okay, so it is a physical deliver product. So you actually, for those people that, excuse me, sorry, in the industry, they can use it as they can collect, they actually do delivery, take or make delivery in the PTI, port and installation. Okay, But obviously, as if you are I think most of the people here, the attendees today are retailers and probably just quite new to the product. Since this is an introduction to CPO. So the tradable month, usually you trade 3 months forward. Okay. So for example, now it's July, the active month is September. All right. So usually for our retail clients, we tell them to get out before. Definitely don't hold spot month position, because unless you have a very big swimming pool to put the palm oil. Okay, so next we have futures position is secured by the BMD clearinghouse. So everything is the funds are your funds, the deposit with us, the margins are safe. Okay, and this is also inclusion of the last is the inclusion of traceability of the palm oil. As I mentioned earlier, the MSPO. So everything, this is basically the key characteristics and features of the FCPO. Moving forward, okay, so now we have already covered the second part, what is the FCPO contract. Now we have to go into a bit more detail slightly on the contract specification and the characteristics of the FCPO. Okay, so okay, now we have to look at the contract specs on the under the green heading. Okay, contract unit is 25 metric tons. Okay, so every time you buy one contract or one lot, so to speak, okay, of FCPO, you are buying essentially it's 25 metric tons of crude palm oil. Okay, the tick price, so every price movement is 1 ringgit. Okay, so that's the minimum tick size. Trading hours 10:30 to 12:30. Okay, and then the afternoon session is 2:30 to 6 p.m. Okay, but now Bursa is going to launch. BMD is going to launch a T+1 session. So I think probably by if not late third or early fourth quarter, there will be a night trading hours as well. Okay, so if the once that happens, it will be announced publicly. Okay, so the contract system spot month, so it will be, in this case will be July, and then up to 11 succeeding months. Then after that, alternate up to 36 months ahead. So basically you can hedge up to 3 years. Okay, but obviously the most active is the third month. All right, so the trading day will be the 15th day of the delivery month. So basically on every 15th, the contract will expire. So not expire, it will be so to speak expired. Okay, and the settlement method is physical settled. I think this is also in line with the Shara compliance. So there's actual physical delivery involved at the end of the day. Okay, so as of now, margin is 6,000 for outright position. Okay, outright means you are going to hold the position overnight. All right, intraday, if you in out means you day trade, the margin is 3,000. Okay, and spread, if you do a spread trade, example, just say by July, sell August, is considered 1,007. Right, so these are the margin requirements for the FCPO. In terms of leverage, okay, so futures, when you trade futures in general, is all a leverage product. Okay, so 4,000 is the basically assumption. Let's assume now the palm oil is at 4,000. So you multiply with the contract unit of 25 because that's the contract unit. So basically it's about 100,000, right? It's 100,000, and you're only paying 6,000 margin. So your gearing or your leverage is actually 16 times. So essentially, you're putting in 6,000 ringgit to trade 100,000 worth of crude palm oil. So that's an example. If you look to the top right side now, key things to know that it's already mentioned there. So 6,000, you put to trade to gain exposure, I would say, of 100,000 in the CPO market. Right? So at the bottom part there, just an example of a basic example of how the calculation is done. So just say you are bearish in the market, you expect the market to drop. So you short one at 4,000. All right. Okay. So you short sell one at 4,000, and then the August price drops to 3,920. Okay. So what you do is you have to buy back, so you long, so you buy back one at 3,920. So that will be a difference of 80 ticks. So 80 ticks multiply the 20, because each contract is 25 tons. So multiply by 25 ringgit. So in this case, you made a profit of 2,000 ringgit. Okay, so this is just a sample calculation of FCPO, right? So next we have, okay, Now I need to basically just share with you a bit on the risks in terms of margin. Okay, how does futures margin work now? Okay, so in the futures world, actually margin rate for futures products are actually much lower lah. Okay, most contracts you are putting in about 3 to 12% of the total value of the notional value lah. What we say, okay. So in that case, in the case of the palm oil, as I already mentioned in the previous slide, you're putting in 6,000, you take about 100,000. So I think it's about what 12%, right? So roughly depends on product. It's around 3 to 12%, all right. So there's two main kinds of margin, which is your initial margin and maintenance margin. Okay. So for initial margin is the amount of money that you need to put in to open a futures contract, whether it's a buy or sell. It's also called original margin, but initial margin is the more common term. So this amount is posted when the trade first takes place. So in this case is COD lah, cash before trade. You must put in a margin before you trade. Okay. Next, moving on is maintenance margin. Right? So maintenance margin is the money you need to keep in your fund at any given time to cover any short margin or losses, short margin, I would call it. Okay. So if your futures position suffer a loss, you will need to put in money to your account to top up back to the original initial margin. Okay. Don't worry, I will give you an example, but as I said, just at the bottom part, there are other variants, the other like intraday margin, spread margin, but as long as you understand that these two key features, it's a good foundation. So example, when would you get a margin call? Okay, so in this case, when it drops below your maintenance margin. So example, there's 10, you are going to buy 10 lots of FCPO. So margin for one lot is 6,000. So 10 lots, your initial margin will be 60,000, right? And assuming that your maintenance margin is 5,500, okay? So just say that the value of your account drops to 54,000, okay? Once it hits below 55,000, right? Because now you're already below your maintenance margin, okay? So you need to top up back to your initial margin. That means you need to top up 6,000 to go back to your 60,000, back to your IM, all right? This is how it works. Alternatively, if you don't want to top up the money, you can also, to close off the margin call, you can either reduce your position or you can trim your position, you know, accordingly to meet back to make sure that your IM it's sufficient, so to speak. Okay. So this margin, initial margin, and maintenance margin, it's subject to change. Okay, because the exchange they will have some risk parameters, but it's not often. They don't usually change margin. Right. I think maybe a couple of times a year throughout, especially during like the long holiday period, if there's a public holiday. Because they are afraid that, you know, overseas there'll be global factors that fluctuate the price. So generally they will increase the margin, but after that they will reduce it back. So it's the margin is privy to the exchange, and they have the right to adjust it as and when. But obviously we will notify you in advance. The broker will notify you in advance. So as a summary, futures margin is the amount of money that you deposit and keep on hand with your broker to open a futures position. Okay, so it's not a down payment, and you do not own the underlying commodity. It means you don't actually own that 25 tons of futures. Of the crude palm oil. It's just sort of like, I would say, a deposit specifically for your futures position. Okay, so next we will have the benefits of trading FCPO. Okay, firstly, it's a low transition cost. Okay, most of you, I'm sure, have traded equities. So if you know, equities is generally based on a percentage. But for FCPO, it's a fixed rate, so to speak. Okay, so it regardless of price. So whether palm oil is trading at 3,000, whether palm oil is trading at 4,000, it doesn't really matter, because it will be fixed to a specific rate. Two-way entry. You can do your long and short. So basically, you can short sell into the palm oil. If you basically, if there's an upturn or a downtrend, it allows you to trade. Okay. Safety and security. So as I mentioned earlier, you know, all the counterpart. There's no counterparty risk. It's all because it's all mitigated through the clearinghouse, the Bursa Malaysia Derivatives Clearinghouse. So your funds are safe. There will be no fraud and abuse practices. They monitor all the funds. There's a system. Regulatory practices in place. Futures leverage, as I mentioned earlier, you know, futures is a leverage product. Obviously, you want to put in the least amount money possible to make the most, right? Yes. So it allows you to leverage gearing. Protection and speculation is used as a hedging tool. I think this one is more for the people that are physical, the corporate, the plantation and whatnot, the businesses that are involved. And standardization, because the contract is there's a specific contract specifications which I covered earlier, so it's very easy to transfer. You know, like it's a fixed contract. So if you want to buy, sell futures, one lot or buy is a standard lah. Okay, there's no complications in that. Very straightforward, right? Next, we have, so is Crude Palm Oil safe? I think, yes, definitely, because it's traded in BMD, a subsidiary of Bursa Malaysia Berhad. We are also regulated by Securities Commission. So, yeah, you're protected from fraud, manipulation, abuses, and abusive practices. Okay. And why should you trade FCPO? Yes, because it's offered ease of access for participants globally. So regardless from where you are and anywhere from where you're listening from, you can actually trade FCPO. Very straightforward. It provides you a way to speculate the FCPO prices without actually buying or holding the underlying, in this case, the physical palm oil. And it's also, you can use it for this one is more applicable for the plantation, used for managed risk of unfavorable price movement in the physical markets. So moving forward, we move on to the last area. Okay, so these will be the key steps of successfully trading FCPO. So basically, this is just my own opinion. This is some of the steps that I think that is required for someone to be that would help you in your journey to successfully trade FCPO. Okay, firstly, there's 8 keys how to build a winning FCPO trade. Okay, key number 1, trading style. Okay, trading style, you need to identify what kind of trader are you. Day trader, short term, quick decisions. Swing trader, wait for right signals. The time frame is a bit higher. Okay, so you basically have an indicator, whether it's a charting system or whatnot. Then you trade once there's a signal. And then they have the stronghold investors. So people that buy and basically hold their position, usually more fundamentally driven. Okay, these are the long-term players. Okay, so you first have to identify what kind of trader. And I'm not saying that you can only be one. Okay, but generally you'll be more of two that is more closely related. So example, you might say, I am a swing trader. I will trade based on charts, but I also want to do day trade. That is perfectly fine. Okay, so you need to find what system works best, but you have to be firm on that trading style which best fits you. Let me give you an example. Now I know this client, when he first opened an account, he said, oh, I want to be day trader. I want to be a scalper. It means I'm only going to day trade. And maybe if sometime I will hold overnight, 1-2 days at the most. So recently I see the statement, because once you go to Spotman, right, obviously we will take notice. So I was shocked to see, why you are still holding the Spotman contract? So to me it's a bit odd that he said that he's a short-term trader, day trader, but up to expiry he's still holding. Means he's been holding for almost 2.5 months. So the takeaway from this is not to change your trading style just to suit your P&L. If you are a day trader, means you are a day trader. Don't be suddenly, because the position is against you, from a day trader, you hold your position, you will become a long-term trader. So this is one of the things, identify your trading style. Number 2, mental preparation. Obviously, when you trade, there's a lot of emotions involved, right? So you need to have the affirmation to analyze the market and be very pragmatic and logical about it. Okay? Don't let personal issues affect your trading analysis. This is a very simple thing to key, but it's probably one of the most difficult to follow. Okay, moving on to risk appetite. You need to be based on your trading capital. Okay, so when you put in a fund, the margin to trade, you have to set what is your maximum risk appetite. So this is just a sample example. I say I'm willing to lose 30%. My risk, I'm willing to take 30% of my max capital. So this is a foundation. It gives you a benchmark, right, for you to actually strategize your trade. Do not revenge trade when you lose more. Okay. Most important thing, you have to stay clear-minded and positive towards recouping your previous losses. And you have to be very realistic as well. Assuming you have a high loss ratio, you must remember, once you are down to a certain level, is for you to Okay, assuming you put in 10,000, now you're down to 5,000, right? If you want to make 5,000 to cover back your 10,000 to recoup your loss, right? You have to make 100%, you know. I know some clients, they from 10,000 lose to 1,000, 1,000, they want to make back 10,000. Doesn't that show that you're trying to make 1,000% return? So obviously, you need to readjust your portfolio as and when required, lah. Okay. So this is, you have to determine your risk appetite. Okay. Next is entry rule. Simple yet profitable entry criteria. Okay, it has to be nimble enough for you to make quick decisions, and quick as in inverted commas. Obviously, we don't need to. I mean, do a gung. It's not advisable to do a gung ho buying or selling in the market, but quick in the sense that it's an informed but precise execution of your entry level, easy to follow and achievable. Most people, when they trade, obviously they have their own strategy, their own trading, charting and whatnot. That's perfectly fine. It's very good. It's very useful. But there are some extreme cases where people use too many indicators, and it hampers them to make quick decisions. And bear in mind, when you're using 7, 8 technical indicators for you to initiate a position, right? They might not all be telling you the same thing. You might get mixed signal. Some might be telling you to buy, some might be telling you not to buy yet, wait. So I find what works best is to have a very simple entry rule, something that works for you, okay? Key number 5, cut loss rule, okay? You need to have practice good risk management, willing to cut loss, okay? This rule is the most common. I think you talk to any trader, whether they are just sharing their experience and knowledge, they will always tell you what they say: cut loss, let profit run. But unfortunately, most of the time it's the other way around. People will always cut profit, quickly take profit, and then losses, they will let the losses run. Okay, so this you have to determine. You'll be very firm on your cut loss point. Now that we have talked about cut loss point, so now is the other one. Key number 6, take profit rule. So now you know how to cut loss only when you want to take profit, right? So it has to be based on, my suggestion, risk reward ratio. Okay, you need to be creative when you are looking into this. Okay, generally the rule of thumb is your reward has to be greater than your risk, right? So in this example, 1-to-3 ratio. So if you are willing to risk 1,000 ringgit, you need to be compensated by at least 3,000 profit. Okay, so just an example, just hypothetical. Not when you flip a coin, it's either heads or tail, 50-50, correct? If I tell you each time I win, I give you, I buy you one teh tarik, but if you lose, you buy me 2 teh tarik, right? So obviously the odds are not in your favor because it's 50-50 at the end of the day, All right? This is a very layman, basic example. So what I'm trying to illustrate is that basically, out of say, if you go in 10 trades, right? Chances are, assuming you make 5 correct trades and 5 right trades, correct trade and 5 wrong trades, right? Each trade that you make wrong, the non-profitable trades you are willing to take 3,000 loss. That's already okay. So out of the 5, you are making 15,000 loss. But every time you take profit, like just now I spoke Key-Fi, you $1,000 you already take profit. So end up your net profit, you're going to lose 15,000 and make 5,000. So net you are still losing 10,000, right? So this is very important. This is one of the most basic fundamental principles that everybody has, but they cannot follow. They know it. A lot of people know this, but they cannot follow. So this one you need to do it to have a firm strategy on this. Okay. Moving on, record your trades. Okay. So you need to identify what are your right and wrong trades, and it helps you observe recurring patterns. Okay. So example, when you initiate a trade, you record it. I mean, I'm not asking you physically to take a pen and write it down. I mean, but generally, obviously, now everybody has statement, my electronic statement, right? But based on my observation, I notice some of these traders that those are very disciplined and usually profitable. They actually record it down, whether they put it into a spreadsheet or whatnot, whatever their own filing system. They do, manually record it, so to speak. Okay. And then last but not least, key number 8, review and improve. Okay, record the recorded trades we just mentioned earlier. You review them and you try to, it provides you with a clearer picture on how to plan and improve your future trades. Okay, so this just sharing with you, these are 3 key points which you can consider and look into when you're developing your trading strategy. Next, okay, so this is just will be our summary lah. Okay, so in order to successfully trade FCPO, identify your best entry and exit strategies. Okay, understand the physical markets. Okay, because it's you are trading the underlying, the notional, the underlying asset is the actual crude palm oil. So you have to be very familiar with the commodity itself. Have good risk management techniques, definitely. Then again, the next one, let profit run and cut your losses short. Plan your trade and trade your plan. Once you have done your trade, make sure you execute it. Okay. If there's any additional information, you can actually log on to the. You require any additional information, please do log on to the BMD website. The link is highlighted in blue below. Okay. So that I think more or less wraps it up for today's session. So just a bit about ourselves lah, Kenanga. Okay, so we have been in the futures broking business in Malaysia for the past 25 years. Okay, we do provide you daily commentary and market updates. So for all the products which we offer lah. Okay, so we send it out on a daily basis. So the stuff that I've mentioned earlier on the data and everything in terms of the production, export figures and whatnot, we also do send out emails to update our client base. And we do periodically, quarterly, biannually and annually reports, market outlooks for you to read up on. And we are mobile, so you can trade us whether you prefer to trade us via your PC, laptop, or even via your smartphone. It's perfectly fine. We are on the go, so we have a app as well, which you all can trade through. Okay, so basically with that wraps it up lah. Thank you so much for listening in, and I think now we will progress to the Q&A session. So I shall pass you to Nadiah now. Nadiah?
Okay, thank you, Mr. Edwin Lee, for the presentations. We hope you found it useful and informative. We will now proceed with the Q&A sessions. Okay, the first question from the Cheong Yong Kai. Where to get production, export, and stock data?
Okay, these data actually, if you open an account with us, we can send it to you. We emailed it to you. But if not, you can go to the MPOB website. They provide, there's a link there. They have all the data. So you can visit their website. It's all published publicly.
Okay. Next question is from Muhammad Amirul Asri. The question is, why is Kenanga brokerage fee to trade FCPO?
Okay, with regards to fee, I think this is a bit, I think, subject to volume lah. Okay, so for usually this kind of inquiries, what we will do is we will follow up. We will get our, if you are interested, what we will do is we will note down your name. We will get our dealers to give you a call, and maybe they can share with you the market rates.
Okay. Okay, it looks like we have covered all your questions today. Mr. Edwin, is there anything else you want to add on this session?
Yes, actually, I noticed there's also a few questions regarding the slides. Yes, so I just want to quickly mention that the slides will be available on the Kenanga Futures website, so you'll have access to it. Don't worry. Okay, actually, there's one more question I can actually also see from Jeffrey Liu. What happens if you hold a long short position, spot market accidentally past the 15? Okay, so basically, they will send you reminders. Don't worry, way before that, we will be calling you already. Okay, because as it becomes spot money, your margin also become full margin. So you're not putting in the example, the 6,000 anymore. You have because to put in a full margin. So yes, and the rates, as I mentioned earlier, is subjective to your trading pattern and whatnot. Okay. I think I'll pass you back to Nadiah.
Okay. I think we have covered all the questions. Okay, is there anything else you want to add, Mr. Edwin?
Yes, I think because due to time constraints, I do apologize. We have actually quite a few questions. Don't worry. What we will do is we will take note of all the chat box, the questions that have been requested. We will respond to you directly via your registered email for this. All right, so don't worry, we will definitely respond to your queries. I think on my end, that's it. I'll pass you back to Nadiah.
Okay, great. Thank you, everyone. Should you have any further queries, please feel free to drop us an email at futuresmarketing@kenanga.com.my. We appreciate you being here and hope that you enjoyed the webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. We will post the link in the chat box. Okay, again, don't forget to register our next webinar. Thanks again for joining us and hope to see you again in our next webinars. Good night and stay safe, everyone.
What are you clicking?
Click kenangafutures.com.my, Malaysia's leading derivatives broker.